Hi, my name is Tamil Mani Analaki Kumarasamy, matrix number 273275. Today I am going to do presentation about summary on economic indicators during COVID-19 pandemic. Let us begin. This is the content for this presentation. In this presentation, there is introduction, the effect on the economy before pandemic, during pandemic, and after pandemic, and how the government overcome the pandemic issue. And finally, there is a conclusion. Let us begin the presentation with introduction. The pandemic has claimed countless lives around the world, necessitating mask SOP and lockdowns. Malaysia has adopted MCOs to tackle the epidemic since 2020. Since then, every MCO has been connected to a poor mental health, reduced income, and poverty. The government modified MCO like RMCO, CMCO, and EMCO to protect their lives and the economy. Many wonders if they can save the boat at once. While the lockdown reduced active cases, did the economy improve? Early 2020 saw the first COVID-19 pandemic instance announced. The Malaysia implemented MCO 1.0, a surf lockdown suspended non-essential commercial operation, impacting SMEs and export output. SMEs make up 35% Malaysia's GDP and 75% all jobs. The lockout hampered several SMEs financially. Manufacturers who contributed to Malaysia's export income were instructed to stop operation during 2 months shutdown, causing the GDP fall by 8.3% compared to negative 1.7% growth in 2019. After 169 months of trade surplus, Malaysia posted an RM 3.5 billion deficit in April 2020. The first MCO caused RM 45 million in tourism losses. MCO 1.0 causes Malaysia's economy RM 2.4 billion every day. Malaysia implemented a tighter MCO in January 2021 due to an upsurge in infection cases. MCO 2.0 didn't have the same service impact as the first due less constraints. MCO 2.0 permitted most firms, SMEs, and export manufacturers to remain operating. Thus, the business owners were able to make money during the shutdown. Despite this choice, firms and SMEs struggled because of the first. Many customers and investors remained negative about economy and prefer to save rather than spend, reducing the sales and earnings. Since May, while Malaysia was recovering from the second MCO, infection rate have skyrocketed. The government received another MCO with a few limitations, allowing the most business to continue functioning while restaurants could only offer takeout. This upgrade MCO cost less than first two MCOs, RM 200 million each day. After a few weeks, MCO 2.0 costs rose and reached 9,000 on May 29. These worrying numbers spurred a decision to implement EMCO on selected states beginning 1st June of 2021 and lasting until the daily instance fell below 4,000 per day. President of MCO Association Dato Michael Kang projected MCO 3.0 will have the serve impact on SMEs with 37.7%, fearing closure if the lockdown persists. He also said 40% of SMEs could have troubles covering expenses, putting 2 million of people out of work by end of the year. MCO 3.0 export could have contributed 1% or more GDP. The government approved 8 economic stimulus measures worth RM 340 billion to help company owners and consumers and prevent the economy from collapsing. 20 million households and 2 million enterprises received RM 200 billion from the activities. Let us continue with the effect on the economy before pandemic. Malaysia's growth is anticipated to normalize in 2018 following a strong growth in 2017. However, the economy faced a number of internal and external difficulties throughout the year. Significant logistic and political changes that were brought on part by the trade disputes on the global scale and Malaysia's historical change of the government became the source of economic concern. Unexpected supply disruption in commodities industries had a negative impact on Malaysia's economic performance, causing growth to slow down more than anticipated. The Malaysian economy grew by health 4.7% overall in 2018, displaying remarkable endurance in the face of numerous challenges. These are the data and findings we gathered. Malaysia's labour force grew by 2.0% in 2018 from 15 million to 15.3 million. 299 and 200 workers boosted for the workforce. The LFRPR rose 0.3 percentage points from 2017 to 2018 to 68.3%. Thus, 31.7% of working people were not employed. In 2018, the unemployment rate fell from 3.4 to 3.3. This shows that full employment is still below 4.0. 2018 female LFR rose 0.5% to 55.2%. The female market participation for prime age 25 to 34, 35 to 44 and 45 to 54 was greater than female LFRPR at the national level 1. Male labor force participation increased 0.3 percentage points in 2018. The LFPR for 15 to 24 years old rose 1.2% to 51.0%. 34 to 44 years old saw the 0.3 point again to 97.7%, and the male LFRBR was higher across the age group. Malaysia expects 5.0 to 5.5% growth in 2018 from the domestic demand and exports. Higher commodity prices have boosted the economy this year. This year, the commodity export skyrocketed in the first 8 months. The natural gas revenue rose 3.4% and to 26.9 billion ringgit, while the crude oil revenue rose 33.2% to 18.2 billion ringgit. Manufacturing growth decreased to 4.7% to 5% in 2018. The electrical, electronic and optical items grew 6.9%, supported by the printed circuit board, integrated the circuit microassembles and communication equipments. Refined the petroleum, rubber and plastic products helped the industry increase 3.6%, and the transport equipment and other manufacture and repair boosted manufacturing performance this quarter. This activity grew steadily because of cars and the transportation equipment. After growing 6% in 2017, manufacturing grew 5% in 2018. In Malaysia, the number of employee tertiary educated people increased by 0.5% from 2017 to 2018. The number of employee people with the primary and secondary education fell from 13.5% in 2017 to 13.1% in 2018, and from 55.8% to 55.6%. In 2018, the number of employed people with no formal education rose by 0.1% to 2.7%. In 2018, 48.4% of active and unemployed found work after 3 months and 29.3% within 3 to 6 months. In 2018, 12.6% of unemployed were between 6 months and 1 year, and 9.7% were unemployed for more than 1 year. E&E, crude oil, metal, chemical and chemical products markets, transportation equipment and iron and steel commodities drove the growth. The valuation of the manufactured exports rose by 9.1% to RM 835.48 billion in 2018. In 2018, manufactured exports accounted for 83.7% of total exports, up to 81.9% in 2017. E&E accounted up to 38.2% or RM 380.81 billion of nation exports in 2018, up 11% for RM 37.34 billion. Hong Kong and SAR, Taiwan, China and the ROW, Singapore and Vietnam increased E&E exports. In the second quarter of 2018, PPI fell from 2.3 to 0.4. The drop was caused by the following agriculture, forestry and fishing prices. Crude palm oil prices averaged RM 2,386 per ton, down from 2,462 the previous quarter. The CPI fell from 1.3 to 0.5 in third year quarter of 2018. This quarter tax relief boosted food and non-alcoholic beverage sales by 0.5%. The producer price index fell from 2.0% in fourth quarter of 2018 compared to the third. The entire index fell due to manufacturing, agriculture and forestry and fisheries, and water supplies. Bank Negara Malaysia's international reserves were RM 426.9 billion, up to from RM 423.3 billion. Malaysia's fourth quarter current account surplus was RM 10.8 billion. The goods were accounted surplus increased to RM 33 billion from 26.6 billion in the prior quarter, fueling the better than expected performance. Portfolio investment and other investment shifted from the net inflow to a net outflow in the first quarter. FDI in Malaysia was expected RM 32.6 billion in 2017, down from RM 40.4 billion per the year before. The total assets were RM 1,684.2 billion, while financial liabilities fell down to RM 1,761.9. The Malaysia reported its greatest current account surplus since 2014, when it was RM 19.8 billion. Lower capital and intermediate imports caused the surplus. A reduced main income and the services deficit helped boost the current account surplus. The financial account revealed a RM 13.8 billion net outflow this quarter. Larger net outflow from the other investment costs is Malaysia's FDI rose to RM 21.7 billion, the highest quarterly amount. Hong Kong, Japan and Australia were FDI sources. Malaysia's direct investment board net outflow reduced to RM 5.5 billion from 10.8 billion. DI's main locations were Australia and Indonesia. The total assets were 1,680.7 billion, but the financial liabilities rose to RM 1,763.5 billion from 1,761.9 billion. This increased net liabilities, which stood at 88.9 billion at the end of the 2019. Bank Negara Malaysia foreign reserves were 420.2 billion, up from RM 419.5 billion. Let us continue with the effect on the economy during the pandemic. COVID-19 has harmed Malaysia's macroeconomy and economic welfare. Malaysia's economic problem seems to be caused by two sources. First, it's caused by the coronavirus abroad, and the second by the foreign travel restriction. Before the partial lockdown in Malaysia, COVID-19 in China produced huge supply and demand fluctuation. When China's demand dropped, the exported were everywhere saw reduced prices, and manufacturers everywhere saw production cuts. This may hurt Malaysia's economy. Malaysia is highly susceptible to China's demand and supply. Malaysia trades sustainability with China. Malaysian firms are intimately linked to the globally supply chain. Regional supply networks have become the China-centric. Most Malaysia-China trade involves intermediate items. Global supply chain disruption most affect the intermediate goods. Preventing the spread of the novel coronavirus in Malaysia will have economic ramifications. Firm closure, mobility restriction and travel bans will hurt consumer and private consumption and investment. People and business will suffer. Individual and business affected by the shutdown risk sudden cash flow concern as earning decline. It can cause business to fail, people to run out of the money, and financial system to have non-performing loans. Malaysia's economy reaction to coronavirus outbreak has two parts. First, a quarantine or partial lockdown must be implemented to preserve enterprises and people's revenue and liquidity. First, ensure the population welfare by providing a secure income and liquid asset. Individuals and business can take break without affecting their financial stability. For individuals, the purpose is to lessen the pandemic's effect on Malaysia's capacity to living a such low income or unemployed workers. extending unemployment insurance, especially the JSA under Percosa. It's vital. Under a JSA plan, EIS payment will be frozen for 6 months as long as movement restriction measures the persist. Okay, let us move to the data and finding on economy on during pandemic. COVID-19 pandemic has affected Malaysia's labor market. According to the Statistic Malaysia, unemployment rate rose to 4.5% from 3.3%, or there were 711,000 mass layoff and working hours reduction. Almost every sector is affected. Male labor force participation is higher across the age group. Individuals work to maintain their affluence, garner attention, and cope with the parental and peer pressure, and feel comfortable with and confident. 39% of 20 to 29 years olds works to maintain their level of affluence to or meet their expenses, followed by the positive publicity. Peer, family, and relative pressure, feeding efficient, finding serenity and commitment. This order to determine is constant across the gender, age, and direct and indirect people. The table below shows why people will work in Malaysia in 2020 by age, gender, and number of dependents. The unemployment rates during the COVID-19 epidemic affect Malaysia's economy. Governing economic aspects. Due to the COVID-19 pandemic, Malaysia's economy is devaluing the Malaysia's ringgit and GDP is falling. COVID-19 hurts important sectors. Automotive industry was impacted. As Malaysia's major trading partner, China impacted the economy. Experts say the protected viral outbreak could hurt the economic's GDP. Closing factories and reducing output sales after sales and could hurt the sector. Most auto sector owners indicated shutdown would raise unemployment and generate non-recoverable and fixed expense like salaries. This lockout affected the entire supply chain. Let us move to the next part, the effect on the economy after pandemic. Malaysia started this year and strong and performed well. Malaysia expected 2020 to be a tipping point. People expected the country's digital nation to make significant worldwide advance by then. SARS-CoV-19 includes COVID-19. This virus accountable for the world's health system catastrophic calamity. COVID-19 has generated widespread terror and halted the global economy. Our personal life and corporate operation were flipped upside down by this sickness. Since March 18, 2020, the Malaysia has the Movement Control Order (MCO) in the place to prevent the epidemic from spreading. I wrote these views when the community and local companies were making sacrifices and obtaining positive outcomes. It feels like we are now moving in the right path. Business in the several sectors have ground to half, reducing economic activity. I believe every challenge is an opportunity for growth. Many businesses have changed their organizational structure to stay competitive. Technology makes it easier than ever to run many businesses and stay in touch with the loved ones back home. China uses robots and drones to sanitize hospitals, whereas South Korea uses mobile phones and satellites to track diseases and carriers. 2020 may be the milestone year. Many consider the current days as the end of the turning point. As a result, industry professionals are offering innovative measures to reduce COVID-19 effect and help the nation recover from the MCO in a healthy and responsible way. Every day, the economics and the market experts estimate COVID-19 impacts on the global market. Bank Negara expects our GDP to shrink 2% this year. The World Bank's initial growth prediction for 2020 was 4.5%, but it's now 0.1, matching Malaysia's gloomy outlook. The Malaysia's Institute of Economy Research says 2.4 million jobs are at the risk. Moving on to the data and finding, the leading index grew by 0.5% in April 2022, which is an improvement from March 2020, 1.4 decline. Fewer developer applications led to fewer permitted housing units in the previous month, reducing the LI. The number of housing units permitted, new company registration, and the Bursa Malaysia Industrial Index all contributed to the month's LI decline. This smoothed LI exhibited a favorable trend relative to a long-term trends because it's a constantly higher and higher index point. Long-term and deteriorated but rarely continued. This suggests that Malaysia's economic recovery is on pace. Inflation and growing commodity price must be considered due to the global economy. Since February 2022, coincident index, a gauge of economic performance has risen. This display increased economic activity when economic and social activities are fully capacity. In April 2020, the CL achieved a new high of 120.3 points, up to 5.3 years over year. The CI's monthly growth rate was 2.0 in reference month, up to 1.4 the month before. This is up from 1.0% last month. Retail sales close to the recent in retail trade volume. Furthermore, the business are optimistic about the next 6 months, April to September 2022, with a net balance of plus 25%, up from 18.9%. This enhanced understanding helped wholesale and retail trade, industry and services. The wholesale and retail trade had the net balance of plus 50% compared to plus 27% for the first half of 2022, indicating a good business outlook. This industrial sector, which has plus 22.1% net balance, expect a better business climate. The services sector has a net balance of plus 23.6% and a solid trajectory. From April to September 2022, the construction industry expected to continue on a negative trajectory with a net balance of negative 25% instead of negative 30.8%. In the second quarter of 2022, respondents estimated a gross revenue of rise 14.2%, while 19.0 expect to shrink for the net increase of 26.2%. Over a third expect gross income to stay the same. Last but not least, let us see how government overcome the pandemic issue. The Ministry of Health will continue to establish SOPs and standards, but enterprises can begin operation on May 14, 2022. The global epidemic has strong standing social stigma. Technological improvement has enabled a new way of working and living, such as working remotely and using digital format. Malaysians have quickly adapted to the new form. Frontline and backline personnel, along with the many other key planners, will still need to be present. As Malaysians and corporate leaders, we must look for out their safety on the work. When I look at the big picture, I thought the technology would advance during MCO. Innovative digital solutions are transforming an already changing environment. Individuals are increasingly using internet platforms, organizations are embracing a new communication methods, and conferencing technology is being used for social events. Many occupations and business need to be return to work options. Many team members and occupation will need it to complete web-based self-assessment surveys, check for their aberrant body temperature and long contacts. Solution can be help identify the sick person while enabling the health employees, contractors and visitors to enter the utilizing a unique QR code for increased control and contact tracking. Other solution can be identify those exposed to continuous sickness. The system's QR code reader and QR codes will avoid the contagion, surface infection and the alienation at the workplace entry points. The thermal scanner cameras and sensors can screen symptomatic individuals at the entrance point in the workplace to decrease the coronavirus spread. These gadgets can be screen symptomatic people home and at work. Companies and buildings owners can use the data analytics to discourage the workers from congregating in a large group, increasing the possibility that dangerous diseases will be found quickly. Finally, the conclusion. Since the beginning of the time, pandemic infectious diseases have jolted the planet. The Spanish flu and the bubonic plague which killed 40 to 50 million people. Modern civilization is seeing fewer epidemics. Catastrophic outbreaks do occur, although few survive as COVID-19. A flu outbreak has become a global pandemic. Over 2 million have been infected and 1,400 have been died. Countries exposing lockdowns of movement control orders (MCO) have a catastrophic impact on the global supply chain. Bankruptcies, collapsing the stock prices and unemployment. It's damaging global economics including Nigeria's. After through research, here is my evaluation how Malaysia's economy being affected by its core sectors, exchange rate, stock market and government action to the elevated economic losses. COVID-19 has strained Malaysia's core industries. Malaysia's manufacturing sector is suffering a crisis in oil and gas manufacturing due to a global crude oil crisis and MCO interruption. Tourism is also a suffer. Malaysia is third most popular Asian tourism destination in 2018, would lose many visitors as a result. Because less than produce, the country GDP will fall. Unemployment cost, company layoff reduce net income and GDP.